You've got questions, we've got answers.
And I think that makes your pathway to university a lot easier.
The brain,
especially the first year if you pick the right subjects in year 11 and 12.
Information.
Here, and those signals run down through the spine.
Here in our studio, we'll be bringing you the answer to these questions and more. Join us for InfoMate. Assalamu alaikum and welcome back to another episode of InfoMate. The housing market has shown some extraordinary changes over the past 25 years, with conditions moving through 5 distinct growth cycles which have pushed the national average house values over 400% higher. 25 years ago, the average house price across Australia was around $111,000. Since 1993, average house values have increased by 412%, providing homeowners with a significant wealth boost. The capital gain over the past 25 years equates to around an annual growth of around 7%. In dollar value terms, this means the average house price has risen about $460,000 since 1993. Now, the property price index throughout Australia has almost doubled as well between 2010 and 2017. And a lot of people were under the impression that the bubble had finally burst in late 2017. But with property prices still at record highs, with only some pockets going through decreases, we'll be taking a look at the property price market here in Australia with a focus on New South Wales. To help us understand this topic, we are joined here today by Raza Khan, Principal of Rain and Horn, Rouse Hill. Assalamu alaikum and thank you for joining us on today's program.
Thank you for having me.
Now Raza, how long have you been in the property industry for?
Yep, I've been in the industry for 11 years now, covering both aspects of property management and sales.
Okay.
So over the years I've seen various trends that have taken place since obviously starting in the GFC time back in 08-09. So that was obviously quite a challenging time to start any industry, any career in any industry. And basically, and seen it up to the boom that we just experienced.
So you've gone through some cycles?
Definitely, seen a couple of cycles already in 11 years I've been in it. Obviously the hardest time was the GFC. And obviously experiencing the boom that we just experienced.
So when we talk about the property cycle, what are we talking about?
Basically, a property cycle tends to last between every 5 to 7 years, comes and goes every 5 to 7 years. And obviously we see massive growth and then massive, a downward trends. So basically, that tends to happen and it's been happening for over 100 years.
Okay. So now, what makes this property cycle a little bit different to your standard property cycles?
Definitely. So it's not like a traditional cycle that we experienced. And the main catalyst that we've experienced is an oversupply of stock. And that's increased by new development. A lot of developers who have committed to projects in the last 2 to 4 years they're coming to fruition. And those stocks that they've experienced in a good market or purchased in a good market, those development sites have now come into completion. And then it's just caused a massive oversupply of stock that we're currently experiencing in the market.
And so what made this cycle different was we were talking about the rental market and the sales market is in a decline?
Basically, traditionally what happens is a sales market is doing well, the rental market tends to die off. And if the rental market is doing well, the sales market tends to die off. So we're currently experiencing now both markets are quite I could say, down at the moment. And that's because oversupply. There's so much new inventory coming to market as well as old stock available, and then obviously less people looking to rent or buy, which is causing downward pressure on pricing.
Okay, so now with the rental market in decline, now are we talking that there's more houses available for rent, or rental prices are coming down? What
Correct.
does it mean for the...
So basically it means more houses available for rent, and obviously a lot more to choose from. So tenants tend to have a lot more options and get much more value for their money. So we experienced average Sydney rental average used to be around $600 a week. We're now come down to $570 a week. So it's come down $30 a week over the last 12 to 18 months.
Okay. And has it seen some growth over the past few years with the sales prices as well?
Well, definitely. So the rental pricing in general the average was around $400 a week, and then they crept up to $200 extra.
Wow. Based
on the growth we've had. So we're still up from the peak.
Okay. So that's something that most people fail to understand when they're thinking that we're in a downward trend now.
Correct.
Since roughly 2017, is it?
Exactly. So at the end of 2017, we start to see the market slow down. APRA brought out tightening of interest-only lending to banks, and that was obviously early 2018, which pretty much put the brakes on the property market. Now, we've probably experienced about a 10% decline since that's happened, since probably the first quarter of 2018. And basically, with that being said, it's caused both rental and sales to come back. But obviously, since 2013, we've had a 56% capital gain. So we're only down 10%, so we're still 46% in front, which a lot of people fail to understand.
Yeah. Do you see people seem to panic that their house values are going down if they're
Most definitely. And I think it's the people who mainly purchased in 2017 to 2018 who are experiencing those sorts of declines in their pricing. Obviously, you're buying at one end of the market and you're selling at another end. But people who purchased pre-2017, I don't think there's anything to worry about, obviously, with what they've had purchased for beforehand and to what it's worth now.
Now, when we talk about the property cycle, we're talking about peaks and troughs.
Yep.
And when we talk about the property cycle, we're also talking nationally.
Yep.
Now, do you find the same trends throughout Australia, or is Sydney a bit localised? What are some of the differences?
Well, we're probably experiencing more of a downward trend in Sydney and Melbourne. It's probably the two biggest. Particularly Sydney. Sydney had a bit more of a growth than what Melbourne did. But overall, other areas like, for example, Queensland is holding its own, is doing quite well. South Australia is doing quite well. Perth is doing quite well. So what we find is when we come into these downward trends in the property market, a lot of people who see that they can't afford to buy in Sydney, for example, or if it's out of their price range, they tend to find more value for money in interstate. So which makes a lot more sense. Providing their jobs can allow them to go there, there's a lot more value for money.
So there's not a blanket rule that all of Australia is
No,
in a
definitely
decline.
not. Definitely not. It's more just the Sydney areas, like the Sydney city and obviously Melbourne city as well.
Now, I read a statistic the other day that Sydney's seeing a decrease in demand for around 22%. That's an extraordinary decrease in demand.
Definitely.
Why is that in Sydney?
Well, there's less buyers definitely looking in the market. Obviously, with banking policy tightened up, that's caused obviously less pre-approvals happening at the moment. So banks are quite stringent on who they lend money to. So there's a very strict criteria now that banks are going through at the moment in order to give approval for lending home loans. So we're finding that 22% down is, and don't forget, with that 22%, there was a lot of people looking in the market. So to have 22% down, there are still buyers out there looking to buy.
Okay. Now, when you compare that to somewhere like Tasmania, which is seeing double-digit growth of around 30% in demand, why is that?
Well, basically, Tasmania has got obviously, not just Tasmania, it's other areas, interstate areas as well, but Tasmania has probably had the most focus. We find that the government's policy changes in terms of foreign students coming to Australia to spend more time in interstate areas, such as obviously Tasmania, for example. So we find a massive influx of students going to Tasmania, and that's obviously had a bit of supply and demand. So more demand for properties, and especially rentals as well.
Okay. Now, when we're talking about the demands, it's a bit different to, say, the average pricing.
Yep.
So now, what sort of average prices are you looking around in the Sydney area?
Well, at the moment, at the peak, we're almost hitting $1 million as a median price. Now it's probably creeped down to about $850, which is still, again, still quite high compared to what it was in 2012-13.
Now, when we talk about the decline in the Sydney area as well, Sydney is quite a general term. When you look at it suburb by suburb, there's also some differences. So what would be the reason, say, the Hills District has seen some increased decline than other areas?
Well, basically, the Hills has a bit more of a decline because they create a bit of a false market, particularly because of the Northwest Rail Link. When that came to fruition, a lot of people flogged the market. So a lot of investors came to market wanting to obviously capitalise on future growth. And basically what we're in now, that news is now old news. So pretty much now it's coming down from a certain level. It's probably come back a little bit more, probably another 5% over what Sydney has come back to.
Okay. So when you do hear about these infrastructure developments, people usually think that it's a sign that their areas are going to be going up.
Definitely.
And do they in the long run?
Well, definitely. In the long run, they most definitely do. So basically, it's a bit of a double whammy what happened in the Northwest area. You had a combination of the Northwest Rail Link as well as the property boom, which caused prices to go up a lot higher than what they expected. So if there wasn't a property boom, for example, there would have been a slight increase in general.
Okay. Now we're talking about housing. Is there a difference when you talk about between houses and, say, apartment buildings?
Yeah, definitely. I mean, houses are probably the more popular option. Apartments aren't really favourable to banks. A lot of banks tend to not want to lend. If they do lend, they will like a large deposit in order to lend. There are a number of buildings in Sydney who have got a high exposure rate, particularly particular newer buildings that pretty much, for example, there might be 100 apartments in a building, and out of the 100, 95 of them are on loan, for example. So banks tend to not want to go towards those apartments. Okay. High exposure rate.
Yeah. So we've got a high exposure rate with apartments from the bank lending. Is there also an increased demand with apartments?
No, not at all. No. There was demand initially. But now there's just so many governments approved so many apartments that it's just caused a massive oversupply. Now, to this date, we're still finding off the plan apartments for sale that have been around for the last 12 months still sitting there.
Wow. Now, is that the case just in Sydney, or are we talking other capital cities as well?
That's pretty much all the other capital cities as well,
Wow.
definitely.
Okay. Now, there was also some talk about foreign investment contributing to the boom in the Australian property market.
Yeah.
Why do you think that would have been?
Well, basically, we had a lot of influx of foreign investment money coming to Australia. And basically, if you compare them to the local Australian person trying to buy a property, especially at auction, those foreign investments were pretty much outbidding all the local buyers. So
when did this start happening?
It started happening around 2013, around the inner city areas. We didn't really experience it until probably the Greater Sydney until at least 2016-17.
Okay. And so the foreign investment money that was coming into Australia was just outbidding the locals and making it harder for them to purchase property here.
To come to the property market, most definitely.
And that would be the contributing factors for the recent changes as well.
Correct. So now the government policies now is they've slowed down foreign investment. There's a lot more rules and implications now that the government require if you are looking to pull money out of a country. So with that being said, it's not really making the foreign people, it's not really worth their while to do that. So now we're finding, because of that, that's obviously put a halt to the property market as well.
Okay. And when we're looking at people investing in properties here, there's differences between, say, the people who want to live there, buy and live there, and then people who want to buy and invest. So what are some of the key differences?
Well, a lot of the key difference is a lot of people who are buying, especially foreign investment, are looking for the longer term, maybe for PR reasons and things like that. There are some homes that I've experienced myself that they've purchased 2 or 3 years ago and they're still currently sitting empty at the moment. So they're just more of a ploy to take money out of the country sort of thing.
Okay, and then when you look at it from, say, the Australian market, and you've got people buying investment properties.
Yeah.
Why are they usually buying investment properties? There were some changes in negative gears, or
yeah,
negative
definitely.
gearing's been on the radar these days.
Well, if you're an Australian taxpayer, obviously it's quite beneficial to buy a property from a tax point of view, investment property, I should say. There's a lot more benefits in place where you can claim a lot of the expenses associated with that investment property against your tax. So that's obviously a plus point. There has been talks about, obviously, with government changes, that obviously with an election looming sometime this year, that the Labor Party are looking to abolish the negative gearing side of things. So whether that happens or not, we'll see what happens. Yep. But that's So
is there many differences, say, the banks lending between people who want to live there and occupying, or say someone who wants to invest?
Banks tend to the banks are charging a higher interest rate if you are an investor. So normally it's probably 0.25% basis points. They're charging a little bit extra. If you're an occupier, you get cheaper rates.
Has that always been the case, or is that a recent trend?
No, it wasn't. It wasn't never the case until probably last year. It's probably started happening when APRA got involved, and then APRA wanted to slow down the amount of interest-only loans that were being issued to investors. So the banks, obviously, to slow that down, started to increase their rates. And then we experienced at that particular point that the market started to slow down.
Now, we've touched on the residential and rental markets. Now, what about commercial? How is that different?
Well, at the moment, commercial we're finding has a bit of a growth since the banks started slowing down residential side of things. So obviously commercial space, warehouses, factories and things like that, especially industrial as well, has a bit of an increase. So we found that a lot of people are probably, instead of resting in the residential side of things, have started to go towards the commercial side of things with better yields on rent as well.
So you can see that even in our areas, in the Rouse Hill area, I've seen so many different industrial buildings come up with second stages, third stages, fourth stages.
And they're all sold.
All sold off the plan. Now, what seems to be the main reasons that people are moving into, say, the industrial or commercial spaces? Well,
I think a lot of businesses are now looking at, rather than paying rent, it's probably beneficial to buy something. With the same sort of yield what you will pay on rent, you could obviously pay or service a loan of your own industrial commercial premises.
Okay.
And obviously the tax benefit you get as well, which is quite great, being all the depreciation aspect side of things as well.
So is there any particular areas that have seen a significant growth?
Pretty much Sydney in general. I would probably highlight more in the northwest area. Obviously, like we just mentioned, Withers Road in Rouse Hill, Anna Grove Road in Rouse Hill, Box Hill as well. There's a new Box Hill precinct coming into place as well, which is going to be a large development facility. Marsden Park as well is another one that's had a lot of increase in industrial commercial.
Now, are the pricing for these relatively the same? Are they going higher or lower? With
Look,
the
they're
rest of the
going
market?
higher, and it all depends on the yield. So the rule of thumb is anywhere between 7 to 10% yield on your rental yield is based on that. That's probably based on its value. So we're finding a massive increase of investors, especially business owners, who are going more towards the commercial industrial space, which makes a lot more sense, because if you're looking at paying a landlord, $50,000 or $60,000 a year in rent, you could obviously have the same sort of thing and buy your own unit or industrial unit or commercial premises and service that for the same amount of money.
It makes a lot of sense with the changes in businesses that you've had and the changing in the industry with e-commerce being on the rise. A lot of people are looking at warehouse spaces,
100%.
websites only. They're trying to avoid
Exactly.
the retail space.
Exactly right. So obviously, the internet's played a massive part. Basically, with a lot of online businesses now set up, people need space to store the goods and services, or the goods that they provide. And obviously, having a warehouse such as that, it per square metre, what it's currently worth at the moment, it makes it worthwhile.
Okay. Now we're talking about warehouse spaces. What about, say, commercial buildings with offices or?
Definitely.
Have you seen an increase in those?
Definitely, most definitely. The amount of increase we found in that is there's a lot of, especially with the commercial space in the northwest area, or northwest areas, I should say. There's a massive increase of investors coming to buy that, where we have multiple tenants renting particular commercial space. That obviously maximise your yield. Some owners are getting up to about 12 to 13% yield based on their investment, which is quite high.
So have you seen more people trying to move away from, say, the CBD style of commercial premises to try and get out into the northwest area?
Yeah, most definitely. With the amount of infrastructure that we're experiencing, certainly in the northwest Bella Vista region, we're finding a lot of businesses, especially the big companies, that are coming out towards the northwest area. So which is quite a positive as well, to making Norwest or the Bella Vista area the second sort of hub or CBD, maybe even the third after Parramatta.
Now, we've been focusing on, say, the northwest area of Sydney. That's the areas that have been the main focus of the talk so far, but there's been some significant infrastructure developments around the southwest as well. Can you tell us a bit about what's going on there?
Yeah, definitely. So obviously there's been an approval of a second airport coming, which is exciting news for Sydney, or Greater Sydney in general. So that's obviously going to create a lot more opportunity for new jobs, obviously with commercial space, industrial, commercial, that sort of stuff as well, which will obviously create a lot of investors come to the market as well.
So it's a big deal that there's going to be a second international airport in
Correct.
Sydney now. So there's going to be a lot of movement that was focused around that Sydney airport area.
Definitely.
A lot of that's going to follow around the same in the Badgerys Creeks area that we've got there.
Correct.
So we're going to start with seeing some commercial developments there with the influx of, we've talked about the e-commerce businesses.
Yep.
So the commercial space is going to be at a premium most likely in that area as well.
Most definitely.
Followed by residential.
Correct. Well, we're already finding at the moment, only with the news of the second airport, that the land prices in the area went ridiculously high. So obviously that's just of a bit of a story of what's to come moving forward.
So as with most things, you've got a big announcement of a massive infrastructure development that should be ready around 2026.
Correct.
So over the next 6 to 7 years,
Yep.
You're expecting big development there with everything there.
Definitely.
So what are some of the usual changes that you see, with infrastructure being developed? Is there things that follow?
Well, basically what tends to follow is when there's massive infrastructure and new development, you find a lot more population going to those regions, even the surrounding areas as well. So it doesn't have to be right in that particular area. It could be the surrounding areas as well. You'll find a massive growth.
Do you usually find that the governments also cater for stuff like schools and education, things like that?
Definitely. So university schools, high schools, whatever it may be in the educational space, that obviously will have its own bearing on the growth moving forward.
Okay. What do you think this might mean for the Sydney CBD if some of the focus is going to be taken off that main airport there?
Well, basically the CBD is in a point in its time now where it's so heavily developed that you can't really do much more other than go up. So what we're finding now is a lot of businesses and commercial spaces are now being taken down, and obviously more high-rise of apartments or residentials going up. So what I'll find is there'll be a lot more businesses moving out towards more the southwest and northwest regions, and obviously Sydney will be more of a hub for residential as a residential hub.
There's more residential opportunities there.
100%, and a lot more growth in that particular area as well.
Okay. And now, has there been much infrastructure redevelopment in Sydney now with the North West Rail Link as well? Some of the stations
Definitely.
being built
Obviously, now with George Street, there's obviously the tram that's
Tram
coming.
line.
The tram line's coming into place. That's obviously going to make a lot easier to commute around the city, from one end of the city to the other end of the city. So there's a lot more opportunity certainly for investors as well moving forward, to buy something in the area.
Okay. Now, the CBD, people have typically referred to it as, when you think CBD, you think Sydney City.
Yep.
That's not the case anymore, though, now. A lot of these bigger cities that we've got outside of Sydney are also having their own CBDs.
Exactly. I mean, Parramatta's one. Parramatta is like what it was 20 years ago, was pretty much what Blacktown is now, for example. And now Parramatta, you can't recognise it. It's probably what Sydney was 50 years ago or 60 years ago. So we're going through that cycle now, which out of Sydney areas are starting to adopt their own sort of stamp on the map, if I could say. And Parramatta is the second one. I think it will continue to happen. With areas like maybe even Liverpool will have one. Northwest, which we talked about, will definitely be one. So definitely.
Now, what about population growth? Has that had any impact on the housing?
Most definitely. Obviously, where there's more people, there's more money, and that's what we're finding. So over the last 5 years, we've experienced between a 5 to 10% growth in population, which is great numbers. So where there's people, there's growth. And that's what we're experiencing now, and that's what Greater Sydney is currently experiencing.
So those extra people are being moved to these particular areas, these pockets are being developed to cater for these extra people coming in.
Exactly right, definitely.
Excellent. Now, thank you very much for joining us. I think we've covered a lot of the development that's happening in the Greater Sydney area, and briefly touched on what's happening around Australia as well and interstate. So thank you very much for joining us on today's program.
Thanks for having me.
I hope we were able to outline some of the trends around the Australian property market. You can see that, as always, there are peaks and troughs in the property cycle, and they have been trending upwards over the last few years. With some recent trends in curbing foreign investment and changes to interest rates, there has been an attempt to rein in the Australian property market. Over the last 25 years, we have seen an increase in house prices of around 400%. Now, what's going to be happening over the next 25 years? Well, with recent infrastructure developments all throughout New South Wales and Sydney, well, we'll just have to wait and find out. Thank you very much for watching, and we look forward to bringing you another episode of InfoMate from MTA International Australia Studios. Jazakumullah, Khuda Hafiz.